Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for April the 13th to the 17th, 2020. And so this past week, everyone was waiting for that jobs number. We knew it was going to be bad. This is stateside. We knew it was going to be bad, but the question was how bad and how is the market going to react? Well, the number came out and it was a big number. It was 6.6 million for the past week. Now, aggregated for the past 3 weeks, we have a number of 17 million folks stateside applying for unemployment insurance. That is jobless claims. And how did the markets react? The markets went up. So how do you account for that? So that leaves a lot of people scratching their heads because isn't bad news supposed to mean the stock market goes down? Not necessarily. We'll get to the charts in a few moments here, but we are in one of those weird news cycles now where you have to get your mind wrapped around it if you're new to this type of environment, is that bad news can sometimes be reflected in as good news in the stock market. Right now, traders and investors are seeing that bad news is being interpreted as a condition for the Fed to continue its stimulative programs, which are beneficial to both corporate America and for financial markets. So the central bank, the US Fed right now, is basically backstopping the entire financial system, including corporate America. Unfortunately, the only folks who are not really getting bailed out are, that is, Main Street. So small businesses and folks who do not have exposure to the markets or financial capital markets, they are not the beneficiaries of these big stimulative packages. So as usual, as most of these crises as they unfold, typically as you've seen in the last few downturns, is that we see a widening gap between the haves and have-nots. The haves are the folks who have monies invested in the capital markets, the financial markets in corporate America, and the have-nots, well, they're not playing in those spaces, and so they're not privy to these government and central bank bailouts. So after this whole COVID-19 story blows away, fortunately the gap will once again widen, and we're going to have a deeper than ever divide between the haves and have-nots. So with that out of the way, let's talk about the coming week, the econ calendar, and the upcoming earnings season. So hope you're enjoying the Easter weekend. It is Saturday, April the 11th as I record this video. Tomorrow's Easter is Easter. We had Friday off for Good Friday, and we're back in the saddle for Monday's trading day. Nothing big in terms of earnings or news on Monday. We are going to wait and see, of course, what the continued numbers come out in terms of the ongoing number of infections and mortalities with the coronavirus, but in terms of the econ calendar itself, there's nothing to look at there. Now, in terms of the econ calendar, we're going to be looking at the retail sales number on Wednesday at 8:30. People want to see how that comes out. Retailers had been getting hit really hard, but as you'll see at the end of the video, we'll talk about the retail sector and how it's improved in terms of the stocks in that sector. We got that jobless claims number once again at 8:30 on Thursday, on the 16th. Once again, how big is that number going to be? Stateside is probably going to be another really big number. And in Canada, we've had historical numbers in terms of jobless claims. So expecting the same thing to continue. And that, once again, will probably be good for the markets. We've seen every single time now that you have a dip that comes before the number comes out. And people use that as an opportunity to load up because they're expecting the Fed to do more. And that's pretty much it on the econ calendar. Now, on the earnings season, things kind of get kicked into gear on Tuesday. The banks begin to report. So names like JP Morgan, Wells Fargo, even J&J, not a financial, but a big bellwether name, report on Tuesday. And on Wednesday, we got Bank of America and Citi. All these names have been actually rallying pretty hard going into earnings. Let's see if they can continue. We'll look at a couple of those charts in the video. So with that out of the way, let's launch into the charts now, and let's talk about the week that was and where we go from here. So as I was talking about last week's video, we'll be on the VIX here. We had a bit of a potential. There was potential there for things to get ugly had price done a reversal. Now in the case of VIX, there was not a reversal signal that was going to happen. It was less likely, But the indices had a chance to roll over, but the buyers stepped up when they needed to, and they defended. So pretty much from the get-go on Monday, told us everything we needed to know. Price started fading once again on the VIX side, and that means equities are going to probably head up higher. If you recall, let's go into VIX side. Let's go to the high-level stuff, and then we'll go to the lower time frames, and then we'll drill into the indices. So VIX right now, we had that huge month of March, and everything's sort of changed now with the new quarter, the new month. Because if you haven't been following these videos, there's a very, very important thing that happens at the beginning of the month and beginning of the quarter, and that is the time frames flip around. So that means, you can see pretty much here that little blue line. That's where the month and quarter began, and pretty much since that month and quarter began, the sellers have been in full control of the VIX. So right now we've got an inside month on the VIX, but certainly nowhere near taking out that top end or that bottom end. Would not be surprised whatsoever. We still have a lot of month left, 19 days left, for this thing to stay inside this range, because this is a huge range, right? This is a 100% range. Would not be surprised at all to see this, trade in this way, in this fashion. Very difficult for the VIX now to pop back up and pop above this prior month's high, the prior month's high of 78.84 on the VXX. This would require basically for this balloon to reinflate. This is anytime you see stocks go parabolic like this, once the air starts to come out of it, you can think of the picture of in your mind as a balloon, basically slowly losing steam or air. It's very difficult then to begin to reinflate that balloon once there's a little small prick or a small hole. So that's kind of what's happening here now, is that the air is slowly seeping out of the VIX, and the fear has been leaving the markets. As we said, a few weeks back, it's very hard to keep the levels of fear elevated for long periods of time. We had that for a good 4 weeks, actually more than that. It was a good 2 months of elevated. Well, the VIX really took off here in February, and it really popped above the previous ranges in March. But it's very difficult to remain elevated, especially when you're going into, when you're doing a parabolic move like that. And so now the air is coming out, right? It's just kind of swooping out now, and we see VIX, and I'm still waiting for this air to get taken out, right? So we still have an unfilled gap here at 38.66, and I'm still short VIX for that potential area. On the daily chart, it looks like this. So basically on the VIX, as I said already, once we had the gap down on Monday, we pretty much knew the story. It was going to be very difficult for the buyers of the VIX to step back up again and to cause a reversal there, because we opened up here, right? So this opens of the week. In order for the VIX to really take off, it has to go through the entire prior week's range for this to become for this to become a reversal. Correct? So reversal would mean it has to reverse the prior week's trend down. That means you have to take out a high. Once it gaps down here, right, not only do you have to reclaim the gap, you have to come back through the entire week's range. And that would be very, very difficult. Not saying impossible, that you'd have to see, a lot of elevated fear, or the sentiment would have to change significantly, and the narrative would have to change significantly for that to happen. We did not see it this week. So it went basically inside week down, and just it was a very tight week. It only traded down 8.5%. Pretty tight week comparatively with other weeks. That's what you want to see if you're a seller of the VIX. You want to see these things slowly melt. Now on the daily chart, we have let's start with the 2-day chart. 2-day chart, right? So here it was going to last week's video. It was outside, inside, and down, and just continuation of that. So right now, for the past week, we've had no higher highs. Okay, so basically none of the prior highs have been violated on the 2-day chart. So long as that continues, you can expect the trend is down. There's no point fighting it, because you have full time frame alignment to the downside now. There's your monthly, quarterly open, there's your weekly open, and price for the most part transact to below those levels. Full time frame alignment to the downside on the VIX. Inside, outside, inside, and down, only lower lows, no higher highs. On the daily chart, it kind of looks like this. You had your gap down on Monday, right? And we're still expecting this to get filled out, or the very filled. There's a gap right there at 38.66, but this level here first, 39.50, we're still expecting this to get taken out first. Once that gets taken out, then that gap will likely get filled. because, as explained in the past few videos, it's a very simple ABC pattern, but it's taking a bit of time now. It says your A move down, your impulse move, your A, B corrective move, and then C continuation. We're really expecting that to get taken out. If this does not get taken out, that's something you want to know about. If all of a sudden price comes back up through here and takes out that pivot, starts shooting it back through here, that's when that's when this scenario has failed. But for now, expectation is that it comes back through, it takes out that low, and continues lower. Right? It's just happening very, very slowly, but it is sort of meandering its way to the downside there. So this week it went gap down. Tuesday, a little bit of a scare for some people, but it was only up 2.84%. So you can't, it was definitely not a big move on the VIX comparatively. And then here, Thursday, Friday. Look, Thursday goes up, but comes back on the range. And once this low gets taken out there, it's a reversal. So on Friday, reversed, broke below there, and now you're coming out the other end. Likely going to take out Tuesday's lows. Sorry, this is Monday. Yeah, Tuesdays, Wednesday, Thursday, shortened holiday week. So there's your Tuesday low. So this is Wednesday, and that's Thursday. So we're taking out Tuesday's low. That's the expectation right now, because on the 4-hour chart you have momentum on your side. So it's a Momo down condition on the 4-hour chart. Look, outside, inside, right? On the 4-hour, now outside and down. So momentum to the downside. Just follow that bar, right? Just follow this 4-hour chart until you get a higher high. Momentum is on the downside on that 4-hour chart. So that's your VIX chart. Right now it's just trend following, or just following price. We'll see what happens with the bank earnings. That'll be interesting. But as far as what price is telling you, the VIX is telling you there is no fear right now. Going into the close on Friday. Look, I'll look at the 60-minute chart. So it's tight stuff, right? It's very tight stuff. It's way different than the trading that was happening, 1 or 2 weeks ago on the VIX. This is tight stuff here now. So this is what you would see VIX melting when you have these tight ranges like this. This is not an environment where people are rushing to buy puts and causing the VIX to spike, because things are slowly just melting, and that's the kind of VIX decay you can expect. And so there, outside, inside, and down, outside bar, down. Okay, so this is going to Thursday afternoon. People are not buying puts to hedge themselves going into the long weekend, right? So had there been a bit of fear, right? Like, think about it. You have a long weekend. Does it make sense to buy a bit of protection? Maybe it does if you're fearful, but in this case, it shows you people are not fearful. They're just selling their VIX. They're they're not buying a bunch of puts, so VIX is just slowly melting. So there's your VIX contract. Path of least resistance right now, down on the VIX. So move on to the SPY now. Okay, so here on the SPY, that's being at the high time frame chart, and then all the indices except for the Russell look the same. So we'll just do this one a little bit more detailed, and then we'll go a little faster on the rest of them. So right now, quarterly chart, 3-month chart, outside, inside. Okay, so big down move in Q1 of 2020, but now we're firmly back in the green now for Q2 of 2020, right? So basically, as soon as that quarter started, we had a little bit of trading action below that quarterly open, monthly open, but for the most part, the trading has happened above that quarterly, monthly open. That means we have full time frame alignment to the upside, okay? So this is what happens oftentimes. Anytime, I'll say it again, I've said it in many other videos before. Anytime you see a big green bar like this or a big red bar, it basically means that in a green bar, the buyers were in control for that entire bar's duration, right? So that makes sense when when you look at like a 5-minute bar and I say, look at this, I'll just show you this bar here. See this green bar? It's kind of small because it kind of shrunk a bit. Let's just turn the log. You'll get the picture. So this big green bar right there, it's a 5-minute bar. So for that whole 5 minutes, basically from the time that bar opened to the time that bar closed, the buyers were in control, correct? You can say this as well. From the time that bar opened to the time it closed, the sellers were in control. So when I explained that in a 5-minute bar, you're like, okay, that makes sense. For 5 minutes, the sellers overwhelmed the buyers. Well, same picture here on the, where were we? The monthly chart. Sorry, we were on the quarterly chart. It's the same picture. Right now, right? Basically, it's a big green bar. And it very well could be that you could have these situations where the buyers are pretty much in control for the entire quarter. So obviously there's still a lot of quarter left. The quarter is still 80. We're still early in the quarter, still 80 days left of trading, or 80 days left in the quarter. So this could easily not turn to a full dark green bar. But you have to open your mind to the possibility that's possible, right? The only difference is that this is still an inside bar. So it's not the same as, when you're trading back, like this one here was not inside bar. But this is what's possible. You can still have an inside bar that's entirely green. It just may not be as big, right? It'll still be a smaller range. But that's something that you have to open your mind to as being a possibility that this quarter could very well be a quarter that the buyers hold on to for the strength for the most of that quarter, and not lose not lose that in the day-to-day trading. Okay, this is why we often do the higher time frame analysis, so you see the bigger picture. Because so long as this thing's green on the monthly, or even if it just remains inside this, it's not bearish, right? It's, for the most part right now, it's inside consolidating. And it's very unlikely, who knows, stranger things could happen, but it's very unlikely we're going to see this thing come back up through the range and take out Q1's high in one single quarter. That'd be amazing trading, right? It would be some spectacular moves that would have to happen. But hey, that's something we'd want to watch for. But right now, the more conservative opinion is that we stay inside the prior quarter's range, which then sets up a really, really amazing opportunity going into Q3. Q3 oftentimes can be a very volatile trading period, and so that's you kind of want to see what happens there, right? Do we stay inside quarter? Okay, let's move on. So inside quarter right now, Momo down, inside month. So the broad information has held. This thing bounced off the lower end of that broad information, popped back up. Inside month now, green month. Okay, weekly chart. Momo up. Okay, so buyers full control right now. Okay, so Momo up, outside bar up. In order for this thing to reverse, you need to see this past week's low get taken out. Okay, so this last week I was saying, had the sellers be able to take out this prior week's lows, or the prior week's lows, it was going to get dicey. It was going to get dicey for these for the buyers, because you would have been trading below this quarterly open. See, you opened right there. There was a chance that it could have come back through here, and had they done that, that was the next pivot in play, right? But they didn't. They opened here, and they quickly traded above, and then caused the Momo up condition, causing folks to have to chase it, and the FOMO moves that we saw this past week, as well as shorts getting squeezed. So Momo up, you're not going to see that Momo up condition extinguish until you get this past week's low taken out. What's the chance of that, right? So that's what you want to see this coming week. As you're trading in this sequence here, wherever we open up next week or this coming week, can it break down below here? And if it does, that's when it gets bearish. So that's when you have to really pay attention. But right now you're trading full time frame alignment to the upside, right? There's your monthly, quarterly open. As long as you trade above there and you're trading above the weekly open, that's full time frame alignment. You're not trying to necessarily your bias isn't going to be overly negative so long as you're trading above those levels. Yes, you could try to take a short that maybe would then cause a reversal, that break below here, but right now there's nothing on the horizon indicating that this is reversing. Here's another interesting picture here. So right, if you take a look at the monthly chart, take a look at this price action from the peak of our recent highs, or all-time highs, to the lows of Q1. We have now bounced back 50%. So we've had now a 50% retracement from those lows. So peak to trough is now bounced back nearly exactly 50%. Look, that 50% mark is 278.67. We closed at 278.20. That's how technically perfect it is in terms of a retracement. So right now, the buyers have basically retraced 50% of these losses. There's quite a bit of work to get done to get back up to those highs once again, like I said already, but that's a pretty nice retracement. The bearish picture really remains, if you're more of a Fibonacci person, until you crack above the 61.8 level. Anything above that, then that's when most bears will tend to capitulate and say, okay, the trend has changed significantly now, I'm not going to fight this price action anymore. But so long as you stay below this, this is 38.2, but if I draw the 61.8 would be the other way, it's going to be around here. Okay, so right at that level there, you're going to see that area. If you can crack above here, the 292, 293 area, then that's when bears will begin to say, okay, that's kind of the last line in the sand in terms of Fibonacci traders. So there's your retracement, and that looks the same basically on the NASDAQ as well. So I don't need to show that again. So on the SPY picture, let's go a little faster now. Here's an interesting thing on the SPY front. To close the day on Friday, we tapped that 50 period moving average. It did back off a bit there. That's at that, again, we're still trading at the 50% retracement. We tapped that 50-day EMEA right there. We found some sellers or some profit takers, as I was saying in my chat here. So we're probably going to see this level get touched, and if we do, people are going to take some profits. Very natural place to take profits, especially if you got in anywhere, in this sequence here. That was a nice trade getting back to the 50-day. Why not take some profits going into the long weekend? Saw a bit of that again, but the market's closed very strong still on the Thursday. So for now, what we got in the SPY is the simple sequence here. We've got the Momo up condition on the weekly chart. On the daily front is basically a continuation of the last week, right? So inside and up, and Monday gapped up, right? So Monday gapped up and it just kept going. There's no lower lows there. You're not trying to fade that, right? You're not trying to fade that. You're fighting the trend. Shorts are still getting squeezed now. Anyone who got short, right? They made a lot of money if you got short in this sequence here. If you got short down here, you're now underwater. Okay, now they're getting squeezed. And at some point, they're going to have to say, all right, if we break above the 50 and it keeps climbing up, these folks have to make a decision and say, all right, I got to throw a towel on that short. This is an unfilled gap right there, 288.42. We're not far away from filling that gap now. Right? So there you are on the SPY. And on the 4-hour chart to close the day on Friday, you got an outside bar. So on Monday, the first 4 hours of the trading day, we want to see on what side of this outside bar do we trade. Do you go outside bar down? That's Momo down. Or do you go outside bar up? That's Momo up. Okay, and we just follow that price because it can last for a while. Like this is what happened, going into this is 2 weeks ago, but it went Momo down, right, for a whole day. But then here, the next day, it extinguished it and it popped back up for a whole day. So that's what just waiting, just watching and responding to price. On to the Qs now. So the Qs look nearly exactly as the SPY. Same picture, 3 month as an outside inside now. It's Momo down on the monthly chart, Momo up on the weekly. Okay, so that's a bit of a not divergence, but it's a different picture being drawn on those two. But it's currently inside month, but the lower time frames are showing buyers stepping up, Momo up on the weekly. Q, you end the week with a inside bar and up. So Wednesday you consolidated inside bar right on that 50-day. Look at that. This is actually the 200-day as well. So here's your 200-day, 50-day. You're sitting right on it. And then on a Thursday, we popped up, but it came back in. What you do not want to see going into Mondays, you do not want to see Thursday's lows get taken out, because that would be a potential inside bar reversal to the downside on the Qs. Now, that would only affect very short-term buyers. Anyone who chase this, then they're at risk of getting stopped out. But so long as you trade above this quarterly, monthly open, that you're still trading full time from alignment to the upside. So I'm just going to redraw my ranges now, and you want to see how you trade in relation to this past week's range. On to the Dow. Dow, same picture. The quarterly picture is the same. The monthly picture is the same. Slightly different on the weekly picture. Here, outside, inside, and up. So we were saying last week, right? We wanted to see how this gets resolved, because had it gone outside, inside, and down, that would have been explosive. But it went outside, weekend up, and it was explosive, right? So either way, it was going to be an explosive move. We were just simply responding to price, and once that thing broke above this past week's high, the prior week's high, it was gone. So short squeeze and buyers running to catch up and doing the FOMO thing. So let's do the daily chart. Here it is. Going into this week, right? We had outside inside last Friday. How was it going to break, right? Well, they gapped it up. Well, as soon as that happened, it was like, well, we know which way the trade's going to go. It's going up now. The buyers are in control, because that causes the Momo up on the week. So there's no point fighting that if you understand price. So outside, inside, up, 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 up. Like it's what I just say. The buyers are in full control here. Full time from alignment with upside. Slightly below that 50-day EMEA. There's your 200. The buyers still in control. Just continue to see how that plays out. No point getting cute now and try to create shorts unless you're trading for very small profit takers. Let's go Russell. Slightly different picture because Russell has been lagging in terms of its performance, but right now Russell doing what it's doing, and that is following the rest of the markets here. inside month, right? Not going anywhere there. On the Russell, we do have an outside inside on the quarter, but on the month it is an inside month. There isn't a Momo down though. It's just an inside month. So right now you can see this Browning formation is kind of, well, it doesn't have as clean of a Browning formation as the other indices. I'll just draw it in here very quickly like that. It's a little messier, but you do see that low here. I would say this low here hasn't been taken out yet. Let's just get my trend line here. Okay, I'm gonna move this out of the way for a second. And there we go. So that's that. Okay, well, and that's this level here. We're watching to see if we can take out Q1 of 2016's lows. So still watching for that level. But right now, you know, we're kind of inside this range, big range. So there is your month. On the Russell, we do have that inside weekend up. So once again, how is it going to break? Wasn't an outside inside like the Dow, but it was an inside weekend up. And once it goes inside weekend up, as long as you trade above the prior week's high, that setup is you know, active. It's in force. So you know, there's no point fighting that Russell move once it breaks above it. This coming week, you do not want to see the prior week's low, get taken out if you're a buyer, because if that happens, it's actually an inside buy reversal to the downside, right? I didn't show that in the Dow. I'll just redraw that really quickly in the Dow. But on the Dow now, if this week's low gets taken out, say you come up here and all of a sudden you trade down through here, if you take out this week's low, it's coming after that pivot there. If you take out that pivot there, that will break below the monthly quarterly open, and that'll flip the time frames back to time frame alignment to the downside. So that would be something you do not want to see if you're a buyer, is you don't want to see this low get taken out, because that will put this sequence back in play again. So you know, it was a pretty big week. It was up 12%, right, for the week, 12.6%. So you'd have to have, you know, depending where we open around here, a 12% move back to the downside again to take out that low, and then you even need a bigger move to take out this low down here. So some sort of like from peak to trough here. Let's say we open where we closed, where we left on Friday. You'd have to have a 12.6% move to take out, you know, this pivot low, and that would flip things back to the downside again in terms of the time frame alignment. So on the Russell, looking at the same thing, right? So this week was a big one, 18% move on the Russell. Wow, right? You'd have to do a lot of work to take this thing back out there and back out there in one single week. So maybe it doesn't happen this coming week. Maybe the next week, where you have a smaller week, you have a potential chance for reversal. But for now, full time from alignment to the upside. On the Russell, let's just look at the 2-day chart. I think it explains the lot. So here, what's that, Pat? What's that right there? Momo up, right? So Momo, so that's not Momo yet, but that's an outside bar. Then basically start the week right away with the gap up. Momo up, up. Cannot fight that, right? That's Momo up right now. The trend is up. That's a 4-hour chart, right? It's just climbing up right now. So you do not want to, you know, get in front of that and try to be cute with a short, because until this trend changes, you see a low get taken out. So on Monday or Tuesday, if that low gets taken out, then we start talking about potential reversal. But until you get at least this thing extinguished on the 2-day chart, there's no way you're gonna flip that weekly chart. So the good thing is that when you look at different time frames, you have way more time to react or respond to things. So, you know, if I'm looking for a weekly reversal, if I'm watching the lower time frames, I'm going to have a lot more heads up about when things can possibly reverse. So that would be, you know, what you want to be doing is looking at the lower time frames as possibly triggers to trigger a higher time frame reversal. That's what we saw earlier this year when we saw the potential for things to go down. But for now, until this 2-day chart reverses, there's no way you're reversing that weekly chart. So a bigger reversal would begin here, taking out the, you know, by getting a lower low on the 2-day chart. TSX, how's the TSX doing? We're getting a bounce in Canada. We are. So same thing, outside inside on the quarter, inside month right now, Momo down though, and outside inside on the weekly, just like the Dow. So there you go, pops up. Good week on the TSX, up 9.5% roughly, and then you got to watch out that you don't get an inside buy reversal this coming week to reverse this and get back in this sequence here. Okay, so that's it for the TSX 2-day chart. Pretty much, you know, continuation of this inside move. So here, inside bar up, right? There's no lower lows right now. No, there's no weakness right now being showed by the buyers. Okay, so that's your TSX. Just, you know, watch for that and see, is there going to be a reversal? The reversal would start here by taking out this Thursday's low. Inside bar up. If you break below there, Okay, there's a potential for it to come back here again and fill this. There's an unfilled gap right here now. Come back to the range, but you still got to go all the way back below here, this low here, to turn the to turn that inside bar, to create that inside bar reversal to the downside. That's what you want to wait for. Okay, so let's go emerging markets. Emerging markets also quarterly chart outside inside, monthly chart Momo down. So Momo down, so outside bar down, down, inside month right now. Currently trading below the broadening range formation. All right, so trading below there. As long as this thing acts as support, the bias is to going to be to the downside if this thing resumes its trend to the downside. Right now, it's inside months, so very tight stuff. Okay, outside, inside, and up on the weekly chart. All right, so same thing as TSX and the Dow. We'll draw our ranges once again. Buyers do not want to see that guy get reversed. There's your EM. So just watch for that level. TLT, is this a risk on or risk off environment? Well, TLT actually came in this week, right? So right now on the TLT front, we have on the higher time frame charts, you still got the trend to the upside. Inside and up bar simply consolidating now on the quarterly chart. Nothing much to do there on that quarterly chart because this is a really big range. On the monthly chart, we do have a bit of red, but inside the prior month's range. Look at the huge range in March. How do you get outside that range without blasting into highs again and getting really extended? Outside, inside, you might just get some consolidation here. Again, here's your broadening formation. You can easily come back down here and still have the support of that trend line. So outside, inside on the TLT front, on the monthly chart. Weekly chart, you finally got a reversal. Here, outside bar down and back up again. It was working its way back up, but it getting a bit extended and the fear kind of came out. So now, new quarter, new month, you did a reversal because you took out the prior week's low. So small up and down reversal. Sellers, there's more sellers than buyers. That's what you can probably say about that price action at this time. People are not chasing after the bonds as they were a few weeks ago. And as such, on the 2-day chart here, you saw a bit of selling step in right on the beginning of the week. Inside bar up. That was last week. Oh, this week it went down, right? So there's your inside bar reversal and took out all the previous week's buyers. So that's an example of an inside bar reversal to the downside. So inside bar up, they took out that low right on the gap down on Monday, and they went after these pivots right away. So anyone who bought, on these 6 days, these are 2-day bars, 1, 2, 3 days, right? 1, 2, 3 bars, 6 days. That comes back in and takes them all out. Does it have a lot of strength to keep going down? Maybe not, right? Because you're still consolidating. It's still consolidating inside the prior month's range. Yes, you can still come in here quite a ways and still be in a kind of a bullish holding or consolidation pattern. Here, if the buyers do want to step up, they could do it on this coming Monday. Inside bar down, this low is lower than that low. If they can break above here. Will cause the inside bar reversal back to the upside again. The only issue here now is you're trading below that dark line, which is your monthly quarterly open. So right now it's full time frame alignment with the downside. Yeah, you got some work to do if you're a buyer to break back above that and turn the month and the quarter green. It may just be an inside month for the month of March. So I'll just redraw my ranges here. We'll see how that plays out this coming week. But pretty tight ranges so far for TLT. Let's talk about gold. Gold, though, it's no longer a risk on a risk off environment, but with all the stimulation or the stimulation or stimulus packages from the Fed, it's probably a very good environment for gold, and the prices are reflecting that. So with gold, I'm looking at the MGC contract, the micro gold futures contract. I like this one a lot, easy to trade. It's trading full Momo, right? So Momo up, 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 up on the quarter. This is on the quarterly chart, correct? So Momo up, up, up. It's out of there. Okay, so we've just hit some new highs there for the quarter, broke above the prior quarter's highs. There's less of a panic now. So now people are, everyone's talking about the potential for inflation. The only way that we don't get inflation or even hyperinflation is if asset prices of all things is if we've entered into some sort of deep deflationary period, right, where the prices of real things deflate in value, and the Fed and the government do not want that to happen. They do not want to see stock prices go down, housing prices go down, and the rest. They do not want to see prices sink. So I think right now the Fed is fighting, that battle where they're trying to carefully inject money in the markets, but the byproduct may be in the longer term inflationary pressures on the currency. So there's your Momo up on the quarterly chart, no end in sight so far. Month right there, Momo up on the month, right? So this is full Momo now on the higher time frames. Momo up on the quarter, Momo up on the month. Week, what's telling us here? Look at that. Inside weekend up, that's momentum too. We had this pattern here, outside bar down. She broke above there. That was going to take out that pivot there. Happened this week. Boom. Took it out, right? So back to those highs, recent highs, multi-year highs, in fact, for the gold contract. And I got involved in a pretty nice trade with gold. I'll show you the setup here, and then we'll go on to the next asset. So if you don't forget, so this was the prior. Here is the prior week's range in purple, right? So there's your inside week, right? So there's your inside week. There's the ranges, the purple lines. Here it is on the daily chart. So Monday breaks above the prior week's highs, causing the weekly and up condition, right? The weekly inside and up. Here's your Monday, here's your Tuesday, and then here's your retracement on Wednesday. That retracement taps this breakout level exactly. That's where I want to get involved. The second mouse gets the cheese is, the often quoted term. And so basically anyone who buys this breakout, if they put their stop too tight, if you're a breakout buyer and you buy this breakout, you put your stop too tight, you're going to get stopped out for break even here or at a loss, right? And so oftentimes the folks who are a little more patient and wait for the setup, wait for the reversal, they get way better opportunities because you have better trade location, because you're waiting for people to get stopped out. And once they get stopped out, then you're going to have, and the folks who don't get stopped out, then you're going to have stronger longs. The longs who get involved at this point have more conviction, whereas the guys who are here and they're buying this breakout, that's fast money chasing, and they're the FOMO guys, and they're the ones they're the first ones to get stopped out. Okay, so let's look at the setup. So I took it on the 2-hour chart, but there was a way better setup on the 4-hour chart. I got involved a little bit early. So I got involved right here. So here's your purple line, right? And I bought it right here. So this was an inside bar down, and this outside bar here, when it broke back above this level, that's when I got long. My stop being here, 1674.9. So that was the stop. Okay, and then so it basically went nowhere for a full day. So I went outside bar, inside, went inside bar down. Came close to getting stopped out here. It went down as low as 1676.4, and my stop was again 74.9, so less than two points from getting stopped out. And that's because I did not take a great trade. This is not a great area. I could have actually waited a little bit longer and got a better trade setup in this sequence. Why is that? Well, I'll explain to you in a second. But you can see, like, once the trade works though, so here's the risk to reward. So there's the risk, there's your entry, and it moved to the tune of, let's see, we're going to draw that in there properly. Goes up to about 3.5 R, so to that trade. So it's a pretty decent setup. I was interested in getting out at the 1722 area. It's right here, 1722.4, right? So that was a good area because that was where we had this previous outside bar. So let me show you a better sequence though, because here's why that entry wasn't great. So the entry wasn't great for this reason. Let me draw it out again. So going into, I'm going to delete this blue line. I'll put it right here. Okay. So recall that price had done this move, A, B, and we're looking for a C extension, correct? Now, as it pulls back on this is the day that I bought here. Okay. What's the chance when it hits this level that price is going to take out this high on the same day? Okay, so that's the thinking. That's the thought process. If you just broke below this prior bar's low, what would this bar have to look like to take out that bar's high? To do it in one day, this bar would then turn into an outside bar, right? So if price comes in, breaks below that low, tests this breakout level, for price to come back through there again in the same day and take out that prior high, that would turn this bar into an outside bar. That is a rare price action because that would require a significant amount of buying for that to happen, for it to take out a low and then take out a high in the same session. But that's what you're expecting to happen if you're taking this trade. And so that's why I was saying before, my trade wasn't great, because that's not a great, it's not a high probability event. A high probability event is that you get a down day like this, and this is where people accumulate the smart money. You accumulate here because now the next day, on Thursday, you have a way better shot at taking out that high versus this day taking out that high. Okay, so now that we know that level, the level here is 1695.8. If you take out that level, that's a reversal back to the upside on the daily chart. So here, back on that 2-day chart, it's 2-hour chart, you could stay on the 2-hour chart, or you can even, because you have the choice of time frames here, outside, inside. Look, that's that level right there, 1695.8. Outside, inside, correct? And there's your, there's your basically reversal right here. Back up through there again with a tighter stop, good risk to reward, and that ends up being a phenomenal trade on the 4-hour chart. I'm curious to see what that 6-hour chart looks like. I think the 6 hours even nicer, gives you even a nicer setup. Yeah, there you go. Outside, inside, and there's your inside bar reversal of the upside on the long trade, right? So inside bar down, and then inside bar reversal to the long side, back up again, because you know that if this pivot gets taken out back here, this is your, right, if it gets out there, going after that pivot, that will trigger things, and that'll come back, that'll turn to a reversal on the daily chart, and you're back to the highs. So very nice sequence there on the micro gold futures contract. Really like that contract. So let's go on to our last asset, and then we'll talk about a few stocks in a fast fire way. BTC USD. We're talking gold. So here, quote unquote digital gold. How's it doing so far? Not doing a lot. So Bitcoin so far outside inside on the quarter. How do you get outside of this big quarter here? That's gonna be the challenge for Bitcoin for the next 80 days, excuse me, is how do you get outside that range? Or you just get super choppy here, which is very, very possible. You could get a bunch of chop until Q3. Inside quarter right now. The month, okay, inside month, sitting inside prior month's range, getting tighter and tighter. Okay, and this is all trading inside of, look at this, I've said it before, you're trading inside year, right? So this is actually inside of that year, and that's inside of that year, and that's inside of that year. So each year now, Bitcoin is actually getting tighter and tighter in its ranges. We definitely want to be paying attention though to see if the prior year's ranges get broken. If they do break, then that's going to be significant, right? But maybe this year looks like another tightening consolidationary pattern for Bitcoin. Okay, so there's your year. Still got a lot of year left, but again, the ranges are getting tighter. Okay, on the weekly chart, I'm long Bitcoin, but right now a little bit underwater. I was actually long, I think 15 coins. To be frank, going into this past week, took some profits on a bunch of them already on the pop up, but still long Bitcoin, but basically at break even right now. Slightly below break even. So here inside week, it popped up, and it's just doing a slow grind up. Now I have to watch out here now. Again, I'm so long, but not very bullish on Bitcoin. You do not want to see this week get reversed on, right? So I do not want to see coming to the new week that this low here gets taken out, because now then that can set up a reversal back to the downside. Just eyeballing this, you can kind of see it here. We had a pretty straightforward retracement pattern there, from going there to there, right? So there's your 50% retracement. Okay, so if you're a technical trader and you're looking at that, you're like, yeah, it's basically 50% retracement of this recent down move, and it hasn't been able to crack above that. Now we still have price kind of leading to the downside here. You have to watch out for reversals here, more so because you're still trading inside month. So as soon as this reversal happens, you get a lower low. So this low reverses, it goes up and then down this coming week. Then that's part of the inside bar. That's what inside bar trading looks like. You have a bunch of chop by seeing a bunch of tiny reversals on lower time frames. So that's Bitcoin. Nothing to be, that's not, nothing really to report there. It's kind of tight action, not where the action's happening. But on the 2-day chart, let's look at that one there. You had an inside bar reversal. We had this, it's just grinding up. You can see that. When you have that kind of grind, it's easy to come back through there again, right? So inside bar up, inside bar took out that low, and now it's doing an inside bar reversal. Expect these pivots these pivots to get taken out. So not great for my setup, but you know, in the end of the day, that's what stops are for. If I'm wrong on that, I get stopped out, and that's the way it is. So 2-day inside bar reversal, and yeah, right here, you're sitting right at that weekly open, right there. Okay, so this week has pretty much gone nowhere. As you can see by that this bar here, you're up 0.28% on the week, 0.25%. So kind of a go nowhere week. Let's see what happens. To really say, this can say, well, that looks like a shooting star, doesn't it? It possibly does, but again, that it's not significant until you see the next bar. The next bar will tell us a lot, but it does have to break below this level here to turn those time frames around on you. So there's your BTC chart. So let's now do a few fast fire charts. Here's a few weekly charts that I'm looking at. One I'm looking at this week, Docu. So enterprise software company, DocuSign. Outside inside on the weekly chart. Where's this outside inside? Where does that, how does it resolve? To the upside or the downside? Watching for that. Banks reporting, right, on Tuesday, starting on Tuesday. So Bank of America, look at this one. One outside inside on the week. This past week, big week for Bank of America, up 24% already. Going into earnings, right? Going into earnings on an outside, inside, and up. Same thing with Wells Fargo, it's the exact same pattern. Outside, inside, and up. You got earnings coming, on the 13th here. So now, right, you do not want to see this thing reverse. But that was a huge week for the banks. These guys are up 26% plus on the Wells Fargo chart. So now you're getting into the Bollinger Bands. Is this a fading opportunity, right? So now is the good news priced in? Because you've had a phenomenal run over the past week or so. So is this the run up going into earnings? And if so, watch out, right? There's your earnings day right there. Watch out for these banks because this could be priced in. So we want to watch for that. There will be some good trading opportunities in the banks. Look at some higher time frame charts. Go to the monthly chart now. Some interesting names. So let's talk about Amazon. So Amazon setting up a higher time frame reversal. Did it already. Outside bar down and back up again. So now looking at Amazon might take out the prior February's highs. So that would basically erase the entire pullback. It's pretty much done that already, right? We're trading back to where we were in Jan. So Amazon, again, one of those beneficiaries of the current pandemic. AMD also, pulling itself back up again. Outside bar and down, it did break above that prior high. So just so long, it's kind of what you want to watch for is can AMD, let's grab this bar, can it stay above that level, 50-20? If you can get back above there, yeah, they're going after that pivot there, 59.27. So continue to watch AMD. Curious to see that weekly chart. Yeah, weekly chart, you're kind of grinding its way back up. A little bit dangerous here when you have that kind of grind. You can easily give that back up again. But right now, you got to get it back above that 50-20 area. All right, let's talk about VMware, another software company doing an outside bar down and up again. Once again, full time from alignment with the upside, going after that pivot right there. I'll delete some of these lines. We don't need all these anymore, so let's delete some of these. And let's just track that level we just talked about there. So we'll just draw that back in. Oops, delete that out. Okay, and so there's our VMware chart. We visit that at some point. And look at Dollar General. We talked about this a couple weeks ago, right? Going right in the highs. So Dollar General reclaimed all those losses from Q1 and going right back to all-time highs. Dollar General definitely a beneficiary for these tougher economic times for some folks. So it had gone. If you look at the weekly chart here, actually, sorry, I'm gonna go back to the monthly. You don't see it because I think I deleted it. So give me 1 second. I'm just gonna turn it back on. All right. So DG, this is what I wanted to show. Was this outside, right? So 3 outside bar months in a row. So that was a lot of volatility there. People were getting chopped up like crazy. And finally, right now, the buyers have taken over, taken control. Outside bar up, that's Momo up now. They're the winners of that whole battleground here. That was that was the price action here. So very very wide ranges, and the buyers are now ahead on that time scale. All right, and finally, to wrap things up, we'll do our rapid fire of some stocks that are trending, and just comparatively see how they've been doing for the past. Maybe see how their trends have been doing for the past week. As I said, these are kind of stars and dogs, just based upon a modified Sharpe ratio, seeing which trends are changing and where the money is going. So in terms of money flowing out, in terms of big trend changes, is VIX. So we talked about VIX already, but this past week, VIX, the trend of the VIX to the downside actually increased. So now we're seeing VIX as one of the stocks that has significantly lost its trend. So that's VIX. Now more money's flowing out of the VIX. TDOC, again, one of those names that was doing very hot during the phase of panic when people were first worried about coronavirus. Well, this past week, you can see this low move to the upside. We had a nice kind of parabolic move to the upside. Now this past week, the trend is now changing. It's going to the downside. You can clearly see now we had a lower high here. I think it's beginning to float to the downwards. Net as well. Cloudflare, not sure why this is. Not sure quite what the story is behind that. But Cloudflare getting hit this past week. This strong trend that had been upwards turned over and now heading downwards. Inside bar down aggressively on Cloudflare. Bonds, CLT, we talked about this one already, right? So the trend also changed on this one, trending downwards. Again, we may see reversal, but you still have a lot of work to do to get back above that quarterly monthly open. On the upside, where's money going? Well, some of it's going to retail. Look at our friend Macy's. Macy's had been looking terrible going into a couple weeks ago. You can see the trend was accelerating to the downside. Everything kind of changed here. Outside, inside pops up, right? So money chased after Macy's to buying all these dogs, and Macy's had a huge, 38% move this past week. We only had 4 trading days, so it popped up 38% in 4 trading days. So that means the retail sector, which had been getting really, really hit, and this is a good ETF to track, XRT. The trend changing on XRT as well. So money flew back into XRT. That's the retailer. That's the retail ETF, and it was up. Look at this on the weekly chart, outside, inside, and up 23%. Right, so pretty good returns on that ETF for the week for this past week. Another interesting name, Disca. So Discovery Channel. Discovery had been getting hit. Oh, so this is the monthly chart. Excuse me, I'll bring it back to the daily. Had been going close to those lows going the prior week, but here's your reversal. Outside bar and down, reversal back up again, ripped back through that range. Very nice reversal for Disca, and now you have that strong trend change, and that's accelerated to the upside. Yext, software company, strong mover, inside bar reversal, I believe, on the weekly chart, which caused it here. Inside bar down, reversal back to the upside, tickle up this pivot's high. So a nice week for Yext, 32% to the upside. So trend change there, money going to that name. And finally, let's talk about First Solar and a bunch of oil names, but I'll just choose First Solar. They had a very, very strong week. Inside week up to the tune of 17%. You can see the money has been flowing into FSLR now for the past couple weeks. So that's a wrap for this week's video. Once again, I want to thank you for spending time with me this past week. As always, if you enjoy the videos, please recommend to your friends. Subscribe on our YouTube channel and on our blog site, thetradingedge.org, if you want to get a notification when these videos drop. Give us a big like, let us know you like the videos, and if you have any questions, feel free to leave them in the comment section on YouTube or the blog. I'm always looking at the comments and happy to reply to any questions there. So I hope you have a great trading week. Stay healthy, stay safe, and look forward to talking again next week. All the best. Happy trading.